Forex is the largest financial market in the world. Over $7 trillion traded every single day. Before AI bots can trade for you, you need to understand the basics. In this video, I'll explain Forex in simple terms so you can build the foundation for AI trading in 2025. Alright everyone. Welcome back to the series. For those of you who are just joining us, my name is Graham. In part 1, we set the stage for combining artificial intelligence with the Forex market. We talked about how AI is no longer science fiction. It's a practical tool that can give you a serious edge. We looked at the big picture, using data to make smarter, less emotional trading decisions. We basically covered the why this is a game-changing opportunity that you should be paying very close attention to in 2025. It was all about getting you excited for the incredible potential that lies ahead. If you missed that first part, I'd highly recommend going back and watching it after this. So, let's start with the most basic question. What is Forex? The word Forex is short for foreign exchange. It's the act of converting one country's currency into another. If you've traveled abroad, from the United States to Japan, you've used Forex. You exchanged US dollars for Japanese yen to buy things. Buying souvenirs or a bowl of ramen, corporations are doing this every second. Banks are doing this every second. Governments are doing this every second. That collective activity creates the Forex market. New York Stock Exchange, NASDAQ. The Forex market is different. There's no physical exchange. It's decentralized. No central headquarters. It's a global network. Banks, financial institutions, individual traders, all connected electronically. It operates 24 hours a day, 5 days a week. Trading ends in New York. It's just beginning in Tokyo and in Sydney. The market follows the sun. Continuous flow from Monday morning in Australia to Friday evening in New York. Its main purpose is to facilitate global trade and investment. Example, a European company buys raw materials from Canada. It converts euros into Canadian dollars to pay the supplier. In the stock market, you buy or sell shares of a company. Apple, Tesla. In Forex, you don't trade a single thing in isolation. You always trade currencies in pairs. This is a fundamental concept you must grasp. When you place a trade, you are simultaneously buying one currency and selling another. You're speculating on the relationship between two economies. For example, if you trade the EUR-USD pair, you're betting on the Eurozone economy versus the US economy. It's like a financial tug-of-war between two countries. You're betting on who pulls harder. These currency pairs are categorized into three main groups: majors, minors, exotics. Show 3-column graphic. Let's start with the majors. Big players, most heavily traded in the world. They always include the US dollar. Examples: EUR-USD, GBP-USD, USD-JPY. High volumes, more liquidity and generally lower costs. For beginners, and often AI bots, start here. Movements can be more predictable. Next, the minors, also called cross-currency pairs. They feature two major currencies but exclude the US dollar. Examples: EUR-GBP, EUR-JPY, AUD-CAD. Still liquid and widely traded, but often less so than majors. Can be more volatile because they're influenced by two non-US economies. They offer opportunities but need more attention. So, now that we know about currency pairs, we need to understand how they're structured. Every pair has two parts: the base currency, the quote currency. This is super simple, but honestly, it's the foundation of everything. The first currency listed in the pair is the base currency. The second one is the quote currency. In the pair EUR-USD, Euro, EUR, base currency, US dollar, USD, quote currency. This isn't arbitrary, it's a fixed convention. The price you see, for example, EUR-USD trading at 1.0700, shows how much quote currency buys 1 unit of the base. So 1 euro equals 1.0700 US dollars in this example. The base currency is always the one. If you believe the euro will strengthen versus the US dollar, you buy EUR-USD. That means buying euros, the base, and selling US dollars, the quote. Conversely, if you think the euro will weaken, you sell EUR-USD. Selling the pair means selling the base, euros, and buying the quote, US dollars. Every trade is a two-way street, buying equal sign base up, selling equal sign base down. For example, US economy booming, USD strengthens. Look at GBP-USD. Stronger USD likely weakens GBP, the base. So you'd sell GBP-USD. This logic is the core of every trading decision and what your AI bot will execute. Alright, let's get into 3 of the most important terms you'll hear in Forex: pips, spreads, and leverage. A pip stands for percentage in point. and it's the smallest standard unit of measurement for a currency pair. For most pairs like EUR-USD or GBP-USD, a pip is the fourth decimal place, so if the EUR-USD moves from 1.0700 to 1.0701, it has moved up by 1 pip. This tiny movement is how profit and loss are calculated. While 1 pip might only be worth a fraction of a cent on its own, when you're trading larger amounts of currency, those tiny pips add up very, very quickly. It's all about volume. Next, we have the spread. The spread is one of the most fundamental costs of trading. When you look at any currency pair on a trading platform, you'll see 2 prices, a bid price and an ask price. The bid price is the price your broker is willing to buy the base currency from you. The ask price is the price they are willing to sell it to you. The spread is simply the difference between these 2 prices. This small difference is how most brokers make their money. For you as a trader, it means that every trade you open starts with a small, immediate loss equal to the spread. Your trade needs to move in your favor by at least the amount of the spread just to break even. Finally, let's talk about leverage. This is a powerful tool, but it's also a double-edged sword. Leverage allows you to control a large position in the market with a relatively small amount of your own money. For example, with a leverage of 100 to 1, you can control a $100,000 position with just $1,000 from your own account. The broker essentially lends you the other $99,000. One of the coolest things about the Forex market is that it's open 24 hours a day. But it's not a free-for-all the entire time. The market's activity is broken down into 4 major trading sessions. Each session is named after the financial hub open at that time. It starts with the Asian session, often called the Tokyo session. The Asian session is the first to open after the weekend. It's generally calmer and more subdued. Major currencies here: Japanese yen, Australian dollar. Price movements are often smaller. The market is warming up and consolidating after the previous day. Waiting for European markets to come online and inject energy. Then comes the London session. This is when things heat up. London is the heart of global Forex and accounts for the largest volume. Liquidity and volatility shoot up when London opens. All pairs become active, especially the euro, the British pound, the Swiss franc. Price movements are larger and more decisive. For many traders, London is the most important session. Lots of volume and opportunities. Finally, the New York session begins. For several hours it overlaps with the end of London. That overlap, about 8 a.m. 12 p.m. EST, is often the most volatile and liquid time. 2 major financial centers operating at full steam. Major U.S. economic news often drops then, causing big swings. After London closes, activity slows as New York winds down and the Asian quiet returns. So, why does all this talk about trading sessions matter? It matters immensely, especially when we start talking about using AI. Your trading strategy needs to be aligned with the market's rhythm, manual, automated. You wouldn't try to go surfing when the ocean is flat, right? High volatility and big swings, London session, New York overlap, high volume, calmer, range-bound, Asian session. Knowing the personality of each session is key to deploying your strategy and your AI at the right time. For example, a breakout AI bot profits from strong sudden price movements best during the high volume overlap. Running that bot in the quiet hours, late New York, early Asian, it would find few valid signals and might enter bad trades from lack of momentum. The AI is only as good as the data and the environment it's operating in. It doesn't know when to be active. You have to tell it when the hunting is good. Another option, a scalping bot grabbing tiny profits of a few pips repeatedly, works better in a less volatile sideways market. Asian session could be perfect. AI can identify the top of the range and the bottom of the range, execute trades with high precision without being hit by sudden London-New York news spikes. Timing dictates the strategy. Your human intelligence makes the AI smarter. AI analyzes price action, you provide strategic context. Major U.S. economic data, 8:30 a.m. EST. Program the AI to be extra cautious or pause trading around that time, or deploy a news trading AI for the release. Understanding sessions lets you direct your AI to the right place at the right time, boosting success. Alright, let's quickly recap. It was a lot, but it's all important. We started by defining the Forex market massive and decentralized open 24/5 for currency exchange. Building blocks, currency pairs, majors, minors, exotic space currencies. Quote currencies in every transaction. This framework is the bedrock. Make these concepts second nature. Mechanics. How trades work, how money is made. Pip spread leverage. powerful tool can amplify profits, can amplify losses. Respecting leverage, managing risk is the single most important factor. Global trading day, Asian session, London session, New York session, market moods change through the day, London plus New York overlap, equal sign most volatile and liquid. This is strategic info for AI strategy timing. You're equipped to trade smarter, so what's next? This gets exciting. Time to put theory into practice. We'll walk step by step, build your first simple AI-powered Forex strategy. Translate concepts into machine-readable rules. Don't miss it. Subscribe and turn on notifications. Your journey to a data-driven trader begins. Thanks. See you in the next one.